Hello, everyone.
Hey guys, so we're gonna do Genius Wednesdays. So just for everyone who doesn't know, Steve chairs this meeting, and we can chime in with questions on the chat. But we're gonna try and get very disciplined as we're moving forward. So when Jeremy and Steve join in, they will actually kick it off for the official recording. But just so that everyone is clear on the path for contributions. This is more or less like official Genius Wednesdays on behalf of Coin Genius, showing us as subject matter experts with everything on record on this call.
Oh, good. You're already saying it. Wonderful.
Perfect. Yeah, actually, I was just prepping that everything is on record and we are recording. And you and Steve will kick off and share this, and everyone should put their comments in the chat so that we can actually distribute this as content. That being said, I'm going to go on mute and let you take over, Mr. Bourne.
Well, first of all, we don't have Steve here yet, so let's give him a few minutes. Hey, Samson, how you doing?
Hey, good afternoon. Pretty good.
Good.
Greetings from DC.
Oh, great. All right, we'll give him maybe just a few minutes. I'll give him a text right now. 1 second here. There he is.
Hi, sorry. I was trying to do it on my computer, but I couldn't find the link. So I'm just on my phone, but I figured better to come than not come.
For sure. I can send you the link to your email if you want to hop on the computer if you have something to show.
Yeah, let's get that done because I'm sure he has things to show.
Well, I actually have more to talk about than showing.
No worries. Christina, you want to go through again what you just said so Steve's on the same page?
Sure. So Steve, while we were waiting for you, is just reminding that everyone that this is official Genius Wednesdays. This is being recorded for distribution for Coin Genius with us as subject matter experts. So for all the folks on the line, Jeremy and Steve are chairing this. If you have questions, comments, or anything that you'd like to explore, please submit it in the chat, and then Jeremy and Steve will address it and fold it into the conversation since we do plan to actually release this one.
All right. So I guess on that note, I found the topics.
I can just kick it off, Steve, real quick if you want.
Okay, sure.
All right, thanks everybody for joining another Genius Wednesday, where the Coin Genius team, as well as some of our advisors and some industry experts, all come together, talk about the current state of the crypto markets, as well as other markets, and really trying to gain an understanding of what's happening at this current time and where we anticipate things to go from here. So with that said, I'm going to hand it over to Steve Kwan, who's the Coin Genius head of research and development, to talk about some of the topics that he's most interested in this week.
Actually, just the research part, I'm definitely more of a financial and capital markets person. If I was the dev, well, I'm not. There's a lot of very intelligent data scientists and more quantitative people. But since this is a podcast and it's just basically verbal, I'm going to do less of the charts today because I just feel that sometimes something that's slightly controversial or maybe not the most popular topic to talk about is what needs to be talked about. Now, I believe everyone on this call has probably heard me say this before, but this industry, the industry of blockchain, not the industry of cryptocurrency and coins that want to be the next Bitcoin and so on and so forth. I'll make a couple analogies. Think of 1850 kind of like 2008. 1850 was, I don't know, I guess a landmark year in the gold mining industry where seemingly gold appeared out of nowhere in California, Alaska, Oregon, you know, the Oregon Trail. And he who was first could essentially pick the gold up with his bare hands, walk to the store, very little effort made, and made a lot of money. The next person, well, he got some smaller rocks and smaller, and then they needed some guy named Levi Strauss to build pants that wouldn't rip. And there were stores that sold food, shelter, pickaxes, other things that miners would need. All of a sudden, now you needed a pickaxe. You needed to stay there for a couple of days. You could no longer go to the quote unquote shore and pick up this, not free money, but free good that was item that was a commodity that was valued like money, like it was liquid. And well, gold still is highly liquid, but in today's day, you need about 24-hour period to clear it through an exchange for a large amount and get large blocks of dollars, or fiat as they call it in the crypto industry. So how is that an analogy to 2008? Well, in 2008, the financial system was on the brink of collapse, as many of you already know. Why was it? Well, people like to blame the banks. Well, it takes two to apply for a mortgage and buy a home. The banks didn't randomly write mortgage applications for people who they didn't know. Someone had to go into their office. Someone had to go into a countrywide office and fill out an application and pick out a house that they seemingly could not afford and make an offer on it. Then the offer had to be accepted, and so on and so forth. So over the past decade, you've had something called Bitcoin, i.e. what many consider the first blockchain, or I guess first widely known blockchain. And in 2008, it was a Bitcoin was literally pennies, probably even less. I'm guessing on the very first block that was mined. So over these past 10 years, it has become a digital commodity, for lack of a better term. And more people have found value in it. How does someone find value? Why is Bitcoin worth $7,000, $10,000, $1,000, $10, $1 million? Because there's a market. You don't really ask, why is gold $1,460 today? It was $1,480 yesterday. That's what someone's willing to pay, and someone's willing to sell gold at $1,470. Someone's willing to buy Bitcoin at $7,400 for 100 lots, and they're willing to sell 100 lots at $7,450. Well, that's where it is at this snapshot in time. So why is this important? Well, think back to what the US dollar used to be based on. It used to be gold and silver, and there were fixed exchange ratios, but people then found value in silver and silver mining. And once it became non-profitable to mine silver, then silver became a byproduct of copper. And what I've noticed over the past year especially is you've had many people on various social medias, YouTube, Twitter, Discord, Bitcoin Talk, Reddit. They seemingly want to badmouth projects, coins, what have you, where I hear, oh, well, this has to go down because Bitcoin's going up. Well, nothing has to do anything. It's a conscious decision that someone's belief that when Bitcoin increases in US dollar value, then they should sell their other item. Well, that's fine. If that's a trend, that's a trend. But what I've noticed also is this past year, there still is deleveraging in pretty much every project with the exception of Bitcoin. Why is that? Well, that's the multiple $100 billion question. I don't have the answer. If I had the answer for that, well, gosh, I'd pretty much run every single cryptocurrency and blockchain market. So for this to become an industry, you will need more regulation. I've noticed that numerous small exchanges have announced they are doing KYC, and that has to do with a EU regulation that kicks into effect, I believe, on January 1st. And many of the, I guess, smaller exchange traders that I've talked to on Discord or watched on Bitcoin Talk are not very friendly, these regulations. Why? Personal preference, apparently. But for something to be widely accepted, there has to be an institutional size market. You can't have the institutions going to the exchanges and the retail customer trying to buy the same offer and hit the same bid. Otherwise, you get these kind of runaway markets like this year where if Bitcoin's up, everything else is down for the most part in Bitcoin terms. But if Bitcoin's down, then many of these assets are down even further. I would highlight something like Litecoin, probably I guess, in my mind, the number 2 project or coin. I'm going to exclude Ethereum and Ripple because they're, I guess, a company and a smart contract, for lack of a better term. You know, Ripple is controlled by the Ripple Foundation. They release the coins to the public, yet people still buy into that. Why? Don't know. I can't read everyone's mind. But the difference in markets this year and previous years from, I guess, 2008 to 2017 is many people want to blame the founders of a project or call something a scam. But I would highlight a guy I met in Las Vegas from Coin Genius who, what he said to me actually is stuck in my mind quite a bit. His name's Nick Kearney. Now, he pointed something out to me where I think it is really a key in the success of the blockchain industry, and that is kind of marking more of a valuation based on what the project is actually doing, how useful it is, what other entities are dependent on that project. To have all these different projects that want to be a currency, imagine going to your daily shopping or weekly shopping routines and you needed a grocery store coin, then you needed dry cleaning coin, then you needed oil change coin, then you needed Macy's coin, and you needed Saks Fifth Avenue coin, and you needed Nordstrom coin, and you needed Best Buy coin. All of a sudden, my pockets would be full with all these different coins. Why? That no longer becomes a useful case, where if Bitcoin is to gold as the rest of blockchain is to the rest of precious metals and other assets, then I would say that the great many investors that are in this space should consider looking at other projects. I mean, many are projects where they've essentially, their coin, they're very fixated on what is its use case. Well, what is Bitcoin's use case? To be honest, and this is probably controversial, Bitcoin has no use case. Its major use is its liquidity pool. Why? It's the largest, It's also the highest dollar price. It was also the first, so it has the longest time sequence of markets, and it has the most depth. It has the most name recognition. I would say, did all of you Uber into work, or did you ride share into work? Did you Google something, or did you search the World Wide Web on a search engine looking for a piece of information? Did you photocopy something? Did you Xerox it? Did you use a facial tissue when you were sick, or did you use Kleenex? There's just a certain name recognition associated with Bitcoin, and it is the metric that things are measured by, but it's also the largest liquidity pool. How about Ethereum? Well, that's the second largest asset in this class, but I would say that there's blockchain is the similarity, but aside from that, there's not a ton of similarities between Ethereum and Bitcoin. How about Ripple? Well, Ripple's an organization. Ripple was the first really to have its foundation essentially control the coin supply, control the release. You know, you hear, oh, Ripple's releasing 1 billion or whatever amount of coins, and people are salivating to go buy it. I mean, why? Why pay more when you know someone's going to sell it? I mean, what do you actually own by owning a Ripple coin? Do you own part of the company? No, it's not cryptocurrency is not a stock certificate. You technically do not have ownership in that company. And that's what I found out in many smaller projects, which is kind of my wheelhouse in doing more qualitative type research and finding certain values. You know, how many exchange? Yes.
I think this is a really good point because, you know, you talked about that Bitcoin basically doesn't have a use case, saying some controversial things, and talking about, you know, the notion that just because you hold a coin doesn't mean you hold any equity inside of an organization. I think that's where we kind of move to the evolution of things like STOs, right? Security token offerings, registered offerings, where it is actually tied to the organization and the equity of the company. And I'd love to open up the conversation based on those comments to Samson, because I know this is your wheelhouse and kind of the legal framework and the regulatory world, and wanting to see how you think that this all plays into maybe what Steve is saying, whether you agree or disagree, and how you think that might evolve into the STO, and maybe that being an important point as to the evolution of this industry.
Sure. Hey, Jeremy. I feel like you're reading I'm writing down some thoughts as Steve was talking. So I have so far I have 9 bullet points, and they actually answer your question. The 10th one will answer your question. Last week, Germany passed. Also, not a lawyer. I'm only a lawyer on Twitter. I just teach at a law firm, as always, a disclosure. Last week, when Germany passed a law to allow German banks to store and sell cryptocurrencies beginning in January, Steve mentioned that. This takes effect January 1st. So the question is, what does this mean for cryptocurrency adoption? Well, that basically remains to be seen. However, as we consider this move by Germany, there's I've got 9 kernels for us to think through, and for just listeners and the team to be aware. Number one, particularly when we talk about custodians for cryptocurrencies, what are the standard operating procedures for being a cryptocurrency custodian? We ask this because how do regulators issue licenses without a clear definition of best practices for fraud, theft, and loss? That's like fundamental 101. Granted, they're going into the banking sector, so banks have compliance and expertise, but do they have cryptocurrency expertise? And I'm familiar with that, where they're getting their subject matter experts to walk them through this process. The next point 2 is settlement. Steve mentioned this, so I wrote this down. He alluded to it a little bit. So will banks offer instantaneous settlement for cryptos they sell? So if I walk into a bank in Germany and I buy 500 Ethereum, can I go to the back of the line, come back and cash it out? And what does that look like when you scale that up to however many customers they have? Because this really goes to point number 3 when we talk about exchanges. How do exchanges, Binance, Coinbase, Kraken, etc., how do they compete with banks, and not only banks but other fintech apps to provide the same services to customers? Because once Germany goes to implement this, the rest of the EU will follow. Because our 4th point, and again, Steve mentioned this, I'm basically just taking down what Steve mentioned. When we talk about KYC AML implementation, this pushes cryptocurrency adoption into the traditional financial markets, because now you have all of the banking, all of what we consider banking requirements for this digital asset, which are cryptocurrencies. So, which brings us to point number 5. Well, how will cryptocurrency trading be any different than FX trading, as cryptocurrencies that are adopted by traditional firms? And I'm getting to your STO question. Just bear with me for a moment. And point number 6 is, as Germany goes, the rest of the EU goes, considering Brexit's effect on Belgium and Germany's political power. Belgium and Germany are really pushing the Brexit agenda, along with, of course, the folks in England. But we can surmise that as Germany, which is the largest economic power in the EU, as they provide their banks this opportunity to become cryptocurrency custodians to store and sell, the rest of the banks in the EU will also follow this suit. Also Switzerland, because Switzerland is not part of the EU, but they'll be like, hey, we should do this as well. And so once you go Germany, Switzerland, the EU, I suspect you'll also see banks in places like Singapore and Dubai, follow this trend pretty much, I would assume, by Q1 of 2020. The 7th point is, this dooms Malta. This is important because for the last 2 years, people have been talking about, hey, Malta is like the greatest place on earth, even though it is incredibly difficult to open up a banking account for cryptocurrency related enterprises, particularly if you're trying to do an initial coin offering or securitized token offering. The traditional banking infrastructure of Malta does not want to enable its competitors. And so Germany's position is they're going to treat cryptocurrencies like any other digital asset. So they're going to enable their competitors by adding them to their bottom line, adding them to their bucket of offerings for their consumer and retail customers, which does help cryptocurrency adoption, but it also just turns cryptos into FX trading. And so this comes to point number 8, where the real value of cryptocurrencies won't be as money. The real value of blockchain-based assets will be tokenized equity and debt that is traded as easily as cryptocurrencies. And this is where we actually get to the part when we're talking about STOs and ICOs, because I think you're going to see that transition into DAX, and DAX is digital assets, commodities, and securities, where Steve mentioned if you have your Ripple, your XRP, you don't own any equity in Ripple, the company. And so if you don't own equity in the company, you don't actually own anything. And so I think we'll see a transition where that light bulb goes off and they'll say, we want blockchain based assets that are represented as tokenized equity and debt that we can trade as easily as we could cryptos. And this brings us to that 10th point, where the real winners in this are the new middlemen of cryptocurrencies, the new middlemen of tokens, of tokenized assets, the exchanges / banks, and the service providers that enable retail investors and traders to actually do trading and investing. So I'm very excited to see, or interested to see, what happens to Coinbase and Binance when they have to compete with Chase and Deutsche Bank for customers.
Well, that was a mouthful. There's a lot of stuff there to unpack, obviously, but I like the direction that you're heading there. So just kind of going back tangential to what Steve had said before. So do you believe that currently, based on what you said, that Bitcoin specifically doesn't really have a use case, i.e. store of value, sound money, all the things that it's positioned as in the market today?
Yeah, I'm a big believer in the faith I'm a big believer in faith. That's so funny. Um, Bitcoin is, as we treat it now, is a commodity, but again, it goes back to the value of that commodity, and that's based upon people's propensity or ability to use it. And right now, as a deflationary currency, no one's using it. We don't see the trading volume that we'd like to see, and so it's going to be really interesting. You know, Bitcoin is that first edition, that first iteration of blockchain. It sucks. It has a horrible user interface. It's not very customer friendly. Therefore, you don't have any customer service. There's no help desk. When we talk about scaling, humans are humans and they need a help desk. And so how is that going to impact Bitcoin? I think that it will maintain some value, but not in the levels that we'll see. But once we add in the political nature, the politics of the day, particularly with what's happening in the U.S. economy, one of the reasons Bitcoin was created back in 2008, 2009 was because Wall Street got bailed out, Main Street got sold out. And so this iteration, recessions being cyclical, 11, 12 years later, we're coming up on that precipice of another recession. We have all the right ingredients. And so I'm unsure if Bitcoin will be a life preserver, a life raft that a sinking economy has never had before, or what it will be. But I think that as we go into 2020, particularly from a US perspective, we're primed for a quote unquote market correction. And I think the smart money will go into Bitcoin, if only because they've never had this option before. So in 2008, 2009, when I worked at Fannie, or the day I started, their stock was at like $62 a share. By the end of 2009, it was a penny. So I think that people have always looked at, they're gonna just lose 80 to 90% of their portfolios if they keep them in the traditional market. What is the harm if they shift over to this quote unquote exotic option, which is Bitcoin or other cryptocurrencies? So more questions than answers, but I think that we're about to take the 11-year open source experiment that is Bitcoin and add that variable of recession and how people emotionally respond to that to determine what is the value of Bitcoin.
Yep. That's interesting. Yeah, for the last, and Steve, I know you want to chime in here and probably respond to a lot of that, but before you get there, since 2 years ago, that's been my hypothesis, which is that all the price increases that we've seen and decreases over the last 2 years in Bitcoin specifically, as well as crypto as a whole, obviously we all know there's a tremendous amount of speculation there. I've always hypothesized that the time in which we're going to see the true value be derived from things like Bitcoin or established into Bitcoin is going to be a result of some sort of recession or period of hardship for the United States as well as the global economy, and that's really going to determine exactly, to your point, if this is a savior, a hedge against the current currencies or anything else that's happening in the global economy, so people can actually have a safe haven for their money or just a hedge against what's happening. So I think, yeah, to your point, I think that's the best chance Bitcoin has, but it's a 50-50 shot. It could go one way or another. It could go down with everything else, or it could go up to levels that we've never seen.
Yeah,
so it's going to be pretty interesting.
A quick point is that this is why people have just never had the option. So Bitcoin didn't exist in the last recession, so there was never an option. So now that there is an option, and a side note about the next recession is in 2008, social media existed, but not like it did today, not like it does today. So the next recession will be a very social recession, meaning everyone's got a video camera. They can tell their own stories through Instagram, Twitter, TikTok, etc. So you will see a small move. There will be that ignition point will be tiny, but because of social media, it will amplify and magnify it out because people will feel like their whole world is crumbling because overnight everyone will be talking about it. When in truth, it's like it will probably just be a very minor moment and the minor movement in the market, but because of social media, people will be like, "Oh my God, this is happening to everyone." And when we talk about market sentiment in the economy, it's based on how people feel. And overnight, the confidence of people will shrink. And so this will be an interesting moment because now that social media is so pervasive in our psyche globally, when the global emotional sentiment of confidence in the market shrinks basically overnight, when the narrative starts to become, oh, we're really in a recession, we're doomed, it's going to be very interesting to see as people start to, as that FUD and then sets in for just the economy as a whole. I think some people are going to panic into Bitcoin just because they've heard about it, but they've never had this option before. I think that's the big thing is the social effect of the next recession coupled with it just literally never had an option called Bitcoin before, so they're going to do it.
Technology accelerates everything 100%. Yeah, I'm sure we've all seen those charts to where the adoption time for the telephone comparatively to things like WhatsApp, you see that time, the reduction in time overall for mass adoption to a certain level of users. And the same thing goes with things like, Bitcoin. Everybody compares it to the internet bubble and all these different charts and the hype cycles. But I think everything accelerates with the evolution of technology. So that becomes really interesting. But I agree 100%. I mean, presidential campaigns are run on Twitter, right? The viewership of debates comparatively to the interactions and engagement on Twitter is vastly lower, right? So I 100% agree that this is going to be a very interesting time to follow, and social media will play a direct role in how quickly things move and the reaction from people as it relates to whether it's the price of Bitcoin or just the general economy collapsing or not. So anyway, I'm going to open it up. I know, Steve, you wanted to say a few things, and anybody else who wants to chime in, because these are very big topics, controversial topics. So I'd love to hear other thoughts from some of the other geniuses on the team.
Here, real quick, Jimmy, a couple things I wanted to add are that when I say Bitcoin doesn't have a quote-unquote use case, I guess there are. I'll go back to 2018 January. Bitcoin became tangible for me when I saw the liquidity on Coinbase, and you could turn a Bitcoin, which is something I can't see or touch or even really knew what it was, really understood the level or had the level of understanding that I do now. But I realized that markets are markets. So the fact that someone was willing to pay $15,000 for one that someone was willing to pay that price, then there became a certain level of tangibility. And the second, which I will say for Bitcoin specifically, is that precious metals started to accept Bitcoin as a means of wealth transfer, i.e., you could exchange a Bitcoin at a online realtor or an online store or a physical store and walk out with silver or gold or something that was physically tangible that you could see, touch, smell, feel, etc. So at that level, it's the liquidity that people want that becomes the use case, and I can't echo that enough. Where I still can't use Bitcoin to buy my groceries, but I have a picture of my son at a Coinstar machine at the grocery store where someone can put in, I believe, as little as $5 in pocket change and get a little QR code or the private key, and they then own X amount of Bitcoin. I met some guys at a conference in Washington, D.C. in February, where I also met one of the team's leaders, Christina from Coin Genius. And they had an interesting take on, well, how can one make cryptocurrency illegal? I mean, all it is a string of letters and numbers, and it's stored on something called a blockchain. It's, if my name was 123 ABCD, does that mean I'm illegal? Or I don't know exactly. That's a good analogy, but the second point is Samson touched on in 2008. Many feel that Wall Street got rich and it was at the expense of Main Street. And I would compare the quote unquote mortgage bubble or housing bubble of 2007, 2008 to the massive run up in late 2017, early 2018 to cryptocurrency. How do I bring those parallels on? Because as I was saying before with the mortgages, someone has to make a concerted effort to go into a mortgage lending house or go online to their proverbial store and apply and find a house and make an offer and get it accepted. There's many, many, many steps that those individuals want to kind of blame others. Were the standards very lenient, probably too lenient on mortgages? Yes, they were. I have some real estate holdings and know about real estate more than most, but it's very similar to blockchain's use case, and especially what became the use case of Ethereum. And Nick Kearney would probably shoot me for saying this, but Ethereum became money because one entity used Ethereum as a means of raising capital, and then another did, and another did, and another did, and another did. And all of a sudden, there was this huge liquidity pool for Ethereum. It got added to Coinbase, and it's like, oh, wow, one Ethereum. Oh, send it to Coinbase. Oh, you have $1,000 now. Well, then it's tangible. Then there's a huge liquidity pool. So it became a store of value. Whether that's right or wrong, I don't know. Couldn't tell you. But it did, and that's it's in the history books now. The problem with that run up in smart contracts and those entities in the blockchain asset class that were funded by Ethereum was people had to go buy Ethereum to send it into, we'll call it Coin ABC. Then when Coin ABC had to sell that to pay people, because not everyone accepts Ethereum, there were no bids. So you had a run up from $12 to $1,400, and the next year's decrease from $1,400 to, I believe it was $71. Why? Because people were still needed to get cash out, and many of the ICOs had huge budgets and huge staff, and they needed to be paid in dollars, pounds, yuan, whatever their local currency was. So on that part, I do slightly disagree with Samson that it takes two. I mean, someone had to go to Coinbase, open an account, link their bank account, buy an Ethereum contract, send that into whatever company they were investing in. There were probably 10 steps that those people had to do in order to get involved in that ICO. And I would say that none were held hostage until they did that, but they saw these parabolic returns and wanted to be a part of it. And unfortunately, in all cases, or logarithmic returns, there's a bottom and there's a top. And
Steve, we can't hear you.
oh, how about now?
Yep.
Yes?
You're good. Yep.
And I feel that
You're still far away. You need to just get closer to the microphone, it looks like.
Okay,
There we go.
when someone keeps buying, it looks great on a chart, but eventually all charts do come to an end. Whether, the guy who bought Bitcoin at 10 cents and sold it at $10, did he make a bad trade? I'd say not. I'd say making thousands of percent or 10,000% is a good trade. You know, maybe he was a 1-day trader, a 1-week trader, investor. So that's the other part is a lot of these guys were looking at 1 or 2-day charts when they're looking at, oh, wow, I can buy this new ICO for $1, and in a week it's 5, but a week after that it's 10 cents. Well, they broke their own rules. So I think that it's not the ICO's fault. I think ICOs were a door that opened to make blockchain a funding mechanism, and that's really, the third major way of funding an entity now. I mean, you have equity offerings, debt offerings, and now you can have blockchain offerings where, as I've alluded to, and by owning a coin, it doesn't necessarily mean you have ownership in the company. And
Yep.
that's all for my comments. I could probably talk for hours on this, but I'll leave it at that.
No, I would agree in the sense that I've heard from multiple people and I've seen it myself, and I would agree that blockchain and the enablement of people to invest in companies, whether it was illegal or not at the time, is a different story. Was the most efficient mechanism for startups to raise capital in the history of the markets. So yes, for that use case alone, I think that's probably one of the strongest use cases. And now we're trying to figure it out from a regulatory perspective where we can go from here. And it just depends on the jurisdiction. But to Samson's point earlier, it's tokenizing assets that otherwise you couldn't unlock the value in the past. And now being able to do that over the next 3 to 5 years is going to be completely transformational. And it's going to go back to where we saw what happened with the ICOs and money inflows into these organizations vis-a-vis a token, to where anybody, the average retail investor, can actually finally get some skin in the game, and not have to wait behind the 1% of funds that get access to pre-IPO shares.
So yes, as Samson, I just want to chime in. We argue with this with some of our clients, and so when you say blockchain enabled everyone to invest, I would say it didn't. I'd say that blockchain is a technology. What enables everyone to invest is crowdfunding, and we often don't call it crowdfunding because they say initial coin offerings. But when we define crowdfunding very simply, use the internet to solicit funds from strangers. That's called crowdfunding. And so what are you soliciting these funds for? So some people do it for donation or rewards-based crowdfunding. That's their Kickstarters and Indiegogos. And so when we talk about investment crowdfunding, typically for investment crowdfunding, we're saying you're going to make money, or there is a potential to make money by investing in this offering that we're using the internet to offer to the general public. So if you're offering regular stocks, bonds, or an IPO, or if you're offering a token or a blockchain-based cryptocurrency, blockchain is still just the technology. The activity you're engaged in is investment crowdfunding. And so I think it's important to appreciate investment crowdfunding because crowd dynamics are completely different, or how people interact once you herd them together are completely different. Like a person on their own, very easy to walk through an emergency. You put 10 people on an elevator or 1,000 people on a ship and have the same emergency, everything gets far more complicated. And so when you look at the dynamics of people whose greed kicks in, whose FOMO kicks in, this is where crowdfunding, when you can anticipate people's greed, when you can anticipate people's FOMO, or even in some instances, encourage it, build it, that's where crowdfunding is a completely different beast than blockchain, because there's some amazing technology that is built on blockchain. However, that technology does not get itself funded without going out to engage the crowd. And then we have to talk about what does it mean to engage a crowd. You're going to engage a lot of strangers and inspire them to give you their hard-earned money so they can support your blockchain-based project or your non-blockchain-based project. think it's really important that we bifurcate those two, because I think as the industry matures, you will have the tokenization of different commodities. We're just going to say corn and pork bellies, and so those tokenized commodities, assets, digital assets, they will be blockchain based. But how those digital assets and tokens are offered, those offerings will be via investment crowdfunding, typically as equity or debts. And there will eventually come a place where you can trade token for token, which will represent commodities, in which case it won't be for equity or debt, but you can just basically swap those out. But that will be a different form of crowdfunding. So I think it's important that we help it divine those two functions, or those two roles, because blockchain is a really cool tech, and you can even make your own cryptocurrency. But the moment you offer that to some strangers via the internet, you're now engaged in crowdfunding, and crowdfunding has its own set of rules and regulations that will continue to evolve. And savvy investors will be able to benefit from this just because they understand that, hey, you made a really cool technical widget. Okay, how are you offering? What am I getting? Am I going to own part of the company, or am I actually getting the equivalent of a digital gummy bear? So that's the only thing I want to add to that.
Right, and I mean, I'm listening to the conversation here, and I'm of the opinion that when we do see this financial crisis, and we know it's coming, we can see that in the actions of people like Warren Buffett and Berkshire Hathaway, who are sitting on the largest pile of cash that they have in history in anticipation of the crash in these stock prices and so on. As we tokenize these illiquid assets that have not been tokenized before, we're going to see money go in there, and I believe it's in part because we're seeing family offices and financial advisors tell their clients that they should have a footprint, whether it's 3%, 5%, 10% of whatever it is in their portfolio in the digital asset space. By and large, that's Bitcoin, and there's also a small number of other, let's say, top 10, top 50 coins that are in that portfolio, but all of them are based on use case scenarios. So we're going to see a culling of those that don't have a purpose, that don't have an actual functionality. And I do see a scenario where, as we're in this crisis at the very beginning and people are looking for that safe haven in cash, they're going to be looking for their financial advisors to show them a way for a digital asset to be part of that portfolio so that they can ride it out and buy back in when the prices are low. So I just wanted to add my part there.
That's great. Anybody else want to chime in, whether Thomas or Mr. Cox or Christina? I know we talked about a lot of things here, but I'm sure you guys have some thoughts.
I'm good.
Cool. Thomas, you want to chime in on anything here? Or Tim?
Yeah, just a quick one. Not going to prognosticate on the longer term things, but in terms of what assets or strategies did well during the 2008 recession, treasury bonds, gold, then strategies such as trend following and short-term trading, which you can find via live notifications on the CoinGenius website.
Nice. Cool. Christina, you have any thoughts around a lot of the stuff that I mean, these are in line with a lot of the conversations you and I have all the time. So I'm sure you have opinions.
I do. I'd like to open a can of worms here. So since Genius Wednesdays is usually about market analysis, and this is the first one that we're going to release publicly, I'd like to do a little bit of a recap of the recent BTC behavior, the kind of BTC dominance factors that we see happening, our analysis of November as a bullish month and the metrics kind of behind that. Ethereum halving, Ethereum halving is coming up, BTC halving, and the Ethereum hard fork is happening today, 12/4. So there's a lot of like news and activity and things happening. Also, just as a side note, CoinGenius will be tracking a whole bunch of like regulatory event triggers and calendar countdowns and things like that. So there's obviously a lot to unpack for market analysis, but I know that that's kind of the heart of Genius Wednesdays. And as people kind of become more ingrained with our vernacular, and we'll just be doing deep dives, and we spend an hour, just really kind of chewing at it from every angle and thinking about a lot of different perspectives and global impacts and sentiment impacts and how we quantify those things.
Yep. Sounds good. So who wants to dive in? Steve, in line with a lot of the conversations that we've had on Genius Wednesdays and our R&D calls, how is all this playing out, right? Based on some of our hypotheses internally, looking at our internal metrics, looking at the, Bitcoin dominance, all the things that we've been tracking over time. How are you seeing this play out? And Tim Hesselsweet, you can join in on this too.
Well, as of this current juncture, all things not with the ticker BTC are well, not all things, but the great majority are deteriorating versus BTC at an alarming rate. And I would point to the, top 10 that are not smart contracts, that are quote unquote coins. And one looks at what they've done since late 2017, early 2018. Litecoin, Bitcoin Cash. And I'm a believer in Litecoin. I've talked to some of the Litecoin Foundation, and I've talked with guys that go around the country, around the world, trying to promote, cryptocurrency adoption and Litecoin as a means of paying for something. And I use Litecoin because it's a top 5 project and has been around for, many, many, many years. But the problem is not many others are really look like they're doing that in the markets, where each day I look and I see that Litecoin or Bitcoin Cash or Dogecoin or Dashcoin, a plethora of Coinbase type coins are losing their market share in Bitcoin Satoshi terms. And that's the very disturbing part, where there needs to be, a la in the NASDAQ, the top 4 companies, Apple, Google, Microsoft, and Amazon, they're each about 10 to 11% of the NASDAQ. In blockchain, or any index or any market cap, looking at market caps, Bitcoin is 65-70%, and that's just the top line number. I know this is something that I've talked about before, but when you cut the pie into 2 pieces, into 2/3, 1/3, well, that smaller piece still is heavily influenced by the Bitcoin price. So you could have a project or a coin, say Litecoin, Ethereum, Dogecoin, Ether Classic, Bitcoin Cash, Chainlink, Stellar, Cardano, EOS, whatever you choose to look at. If Bitcoin's down, chances are your portfolio in US dollars is down. Now, it's such a weight that most of these projects only control about 10% of their own future. And if Bitcoin dominance were to go down, with Bitcoin decreasing and everything else increasing, you could see an instance where the Cardanos or Chainlinks or Ethereums or Litecoins all appreciate versus Bitcoin, but Bitcoin goes down a percentage that makes the blockchain world in more of an equilibrium, that your US dollar or Chinese yuan or whatever your home currency is, you may not see any gain. And that's the troubling part, that essentially a lot of these projects that are 1 and 2 and 10 and 100, even 1,000 satoshis, they're 95, 96, 99% Bitcoin already. So I don't know. It's it's the $1 billion question, where a project can do great, but they control only 1% of their own destiny. They're kind of at the, I don't know, they're very geared towards Bitcoin still, and I'm not sure I fully agree with that, but that's how the market is, and that's really it.
Tim, do you agree?
I'm somewhat more sanguine, but don't have a great deal to add at this point.
Got it. Yeah, it's really interesting. It's a lot of this is to be determined, right? We're gonna have to see how this plays out. We're gonna have to see, how Bitcoin and some of these other things react to global markets and potential collapse of those economies. We've seen it before, and kind of what leads me to believe that there's a glimmer of hope that'll respond in a positive way, as you've seen, Greece, in the past, default, and that had a positive impact on the price of Bitcoin as an example. And we've seen that in Argentina, etc. So I assume as there's more economic crisis in, larger countries with larger economies, it's going to have an even larger impact on that reaction to the price. So we'll see. We'll see how it all plays out. The most interesting thing that I've seen over the last few days is, we track movements across, the blockchain, and specifically BTC transactions. And just yesterday, prior to the price really pumping, actually, I believe it was this morning, we saw, I think it was 56,000 Bitcoin move from unknown wallet to an unknown wallet. And then we saw the price move from 7,000 to roughly 7,600, now back to 7,400. So we're seeing some very strong movement from wallets that have, I think that is over $400 million in USD terms in Bitcoin. So there's some massive whales moving assets across the blockchain, and it is immediately impacting the price in some way. And that's some of the stuff that CoinGenius aims to understand and ascertain and get these early warning signs of fluctuations and volatility that are yet to come based on factors such as these. So I don't know if anybody has any thoughts around that to close, but there's some interesting activity that's happening. And the cool thing is, comparatively to capital markets, is that we have the transparency of this, open and distributed ledger to where we can actually see what's happening and have some transparency that doesn't really exist in other markets today. Anybody else want to add anything on top of that?
I'm all good here.
Cool. All right, guys. Well, we'll keep an eye out on the markets until next time. This was a great Genius Wednesday. Thank you for everybody who attended and contributed. Really appreciate it. Again, if anybody has any thoughts, comments, or feedback, especially those that are listeners, just email us at info@coingenius.ai. Send us your questions and or topics, and maybe we'll cover it in the next Genius Wednesday. Thanks again, everyone. Have a good day. So for everybody still on the call, that's the format. We'll evolve it over time. This is not something, and just to be clear, because I think Christina has said public a few
Still
times.
recording, Jeremy.
Yeah, it's fine. We have an editor now, so they'll edit all this stuff out.
I'm getting it. Yep.
So no worries. But just to be clear in terms of where this is going to be distributed, so this is going to be a behind paywall type of situation.